So now we're going to get into the market week stock market analysis for the next 1 to 3 months. We are going to look at the spiders, SPY. And the SPY I've talked about in the beginning of the show, and I continue to talk about that. I think that there is a topping period right now, and that sometime by the end of January, we're going to be entering into a corrective process, which should take you into the late February through early March period in the stock market. Let's look at that and see where that comes from. I'll switch from this gold futures here to SPY, the spiders. And here you could see our big chart here of analysis. First of all, you can you can clearly see that there is a big megaphone in here, the great megaphone, and that there are cycles in here that are just remarkable, how that they keep repeating. The wave action in here is fantastic. The yellow ovals that you see in there are the periods where there are likely corrections. Where do they come from? Well, they come from periods of where after the cycle peaks and you get into these declining periods, as you could see right in here. Each of them are fairly significant. A very bullish condition might only yield a 6% decline. This was 6%, this was 6.7%. This was a remarkable only 4.2% drop right over there. But it is very common for these declines to be much bigger than that. This, of course, was the panic in last spring of a 35% decline. This one right over here was at 10.8%. And right now, we're looking for a correction of around 10% in the market. We think Russell might be a little bit larger than that. So what we're looking at here, as you could see, are these dominant cycles right there and the minor cycle that you could see right in here. Now, this cycle peaked on week 18, this cycle 16, and fell through week 18. This one was on 19, it fell through week 24. This was a long one, 24 through 27. And right now, that is week 15 that the peak in. So we're in week 16 right over here, week 17 coming up next week. So there's a potential for a little bit more that it will hold up in here, and that's what we've really been talking about. So the expectation is that we are going to get this corrective period. Again, where these two cycles nest is where there is the greatest downside risk. Has happened right in here and happened right in here and coming into that period right in here. So we expect that we are in some kind of a topping process. The downside supports are at these key levels that you see right in here. So we're trading at 376 right now. The peak was made at 381.5, and 376.5 is where we are right now. And the downside projection is down to this major 23.6% level. That aligns with the intermediate 61.8% level at 343 on the spiders. That would have you have a decline of 10%. And for those of you that follow the SPX, the S&P 500, that would bring you down into the low 34s. And that other supports in here are significant also. So this is the 38% at 357. That would take you down about 200 more points in the S&P 500. This one right over here is at 350, and that's the 50%. So it's the 38.2, the 50, and the 61.8. Those are extremely likely occurrences, and I think that the normal level here would be a 10% loss at that major 23.6%, which is the same place as the 61.8. And all of this risky period in here is in the later weeks right there. So that's why I say this goes out through the beginning of March right over here. The next, in this 1 to 3 month analysis, what we're looking at is, potential little upside move again in here, and then some topping going on, and then the last few weeks in here, which is probably somewhere around the second week of February through early March, are the risks of the acceleration to the downside in here. So choppy in here, set a top, and then accelerate to the downside. I think if I'm going to be wrong about it, there's two ways that this analysis would be different. And that is, number one, it would fall much faster. In other words, it would start to move down now. Or number two, the market is so strong from this upside momentum that you see in here that it only allows it to correct maybe to the 38% right over here, 357 on the downside. And that would set up likely the test in May, June to be actually at a higher level. So get up here and then out over in this area here, I think the major bull market top. If this fell down below to this 10% level or even lower to this 38.2, which would be a 16% drop, then the odds would be greater that this next rally phase out over here the following couple of months would not get as high as that level, maybe get somewhere around half to 3/4 back, and then some kind of a big decline out over here. So I'm getting out more than the 1 to 3 months, but I wanted you to get a picture at how I'm using these cyclical harmonic families to be able to, number one, project timing, number two, using these support levels to project where I think it would come down to. I really expand on this in the cycle analysis basics video that will be available to our free members this weekend. So if you're not a free member, please, and you're not a member at askSlim, sign up for a free membership and you'll be able to watch that just excellent video, which is really the very, very first step to understanding this way to look at markets, cycle analysis. So 1 to 3 month view, a pretty significant risky period coming down into the March time frame, and then May, June being a better period for the market, a rebounding period, and a potential new high period for the stock market if we have all of this timing align up in the ideal. This would be the ideal. There could be some fluctuation with an earlier bottom or even a later bottom, because you will learn in the workshop, Cycle Analysis Workshop, about Hurst's 8 principles, and one of them is the principle of variation, which basically says these lows come plus or minus some bars. There's always shifting around in here, and this is purely an art form. You see this low right over here? Well, that came about 2 or 3 weeks late, as you can see that right over here. These are simply the average lengths of cycles, and the average length of cycle here says that it's going to decline into this March period, plus or minus a little bit of time. That is it for our look at the SPDR, SPY, and a look at the stock market.